Good morning, ARMR Insiders. Welcome to our morning meeting. Thanks for joining me. I hope you guys had a great Labor Day weekend. Let's dive in and figure out how we're going to attack the market this week. So we're going to talk big picture macro, looking at the risk monitor and what has to happen, what may happen going forward, and what that'll do to the portfolios. We'll dive into stocks to watch. What are the top stocks on our top shelf of our whiteboard, how we're going to build that portfolio. We're going to go over portfolio changes we made on Friday near the end of the day, and what are the stocks to buy, like what are the things I'm focused on first thing this morning. I'm also going to go with you a change in execution when it comes to trading the S&P. So these are all the things we're going to discuss. This is a virtual hedge fund. You're the portfolio manager on the desk. So figure out how to take the information and make it your own. You're the risk manager of your own portfolio, right? So figure out risk tolerance goals and then how this information helps you. Just to put it in a structure that I think is a clean structure. What I do with my portfolio is I have a portion that I day trade only the S&P. So when I come in to start the week, start the morning, today the market's down in the morning, I love it. I've got a part of my portfolio in cash looking to capture alpha from that weakness this morning, right? So we have our day trading playbook and we just simply look for gap ups, gap downs, flat opens. When we see a gap down, we go to that section of the playbook. What are we looking for? After the gap down, what will develop that will get us on that trade to harvest the alpha of having that cash? Then we have our investing portfolio, and I break that down into individual stocks and then group ETFs and indexes, okay? So let's go from there. Let's start there with the risk monitor, which drives the index part of our portfolio and the group ETF investing part of the portfolio. On Friday, I took profits across the board in all of our individual stocks that we bought when the risk monitor first turned green. I didn't love the action Friday. Nothing wrong with the risk monitor green. Today is the last day of the risk monitor green action where I will be structuring the portfolio I want for this particular swing cycle. So we give ourselves 5 days to put capital to work. I put a lot of capital to work day one and day two. Then I look at the action that I'm seeing and I try to adjust my exposure for what I want. And then I carry that until the stops are hit. So starting tomorrow, I'm shifting away from what am I buying? What am I investing in? And I shift into risk management mode, manage success mode. As things run up, what targets are being hit? Do I book a profit? Do I raise a stop? That's what I'll be doing going forward. So today's the last day to really figure out what type of portfolio we want and be intentional about it. Okay. So didn't love the action Friday, but take a quick look at the S&P. So risk monitor went green here. 1, 2, 3, 4. Today's day 5. Okay. The fact is the S&P, whether I like the action on Friday or not, it wasn't that bad. And the S&P closes in the top quarter of the range for the week. That's as bullish as you're going to get. I mean, what else are we asking for? Closing right at the highs of the week? It's totally acceptable for it to close in the top quarter, really the top half. So when you get a new risk on swing strategy signal, at the end of the first 5 days of trading or the end of the first week, which that kind of was on Friday, you want the weekly bar to close in the top half of the range, top third of the range, even better, top quarter of the range. That's fantastic. And that's where the S&P closed. That's also where the NASDAQ 100 closed. Okay. Right at the top quarter of the range. Total great bar. Okay. So I would say to you right now, don't fear, okay, weakness that goes and takes a peek at the stops. I would say that happens 50% of the time. New risk monitor green, that looked good. Then it sells off a bit to test the stops. If the stops hold, then it's off to the races. If the stops get hit, it's not a hard decision. We go back to cash. So we already know what we're going to do there to manage risk, right? And so what we do now is we just let it play out. And I posted this for you, to start our discussion this morning for all traders, and it was a bit of a poem, I guess. But what I was trying to say is, look, there are butterfly charts, there are Elliott waves, there's gamma rays, there's dark pools of innuendo, right? All these kinds of different tools in cups with handles, all this kind of stuff. And it's all great, but it's meaningless. It means nothing until the shooting starts. Okay? And what I mean by that is price action is all. I don't care about the butterflies and the cups and handles and the pennant formations until the move starts. Then it means something. It's not a predictive measure. As much as people will grab a bullhorn and try to shout at you that it is. Okay? It's not. Once you get the price action, then you can look at the pattern or structure and say, oh, this is what's unfolding. Okay? But don't put the cart before the horse. Price action is all. Simplify what you're doing. When you get the move correctly, then you can look at your structure and start figuring out, oh, we're in the midst of a head and shoulder breakdown, or this is a cup and handle breakout. And so here are my projections of what I think this thing can do. But just because there's this beautiful cup and handle doesn't mean it has to go up. People swear by the butterfly effect. It means nothing until the action begins. Then maybe it helps you understand what's unfolding. So keep your eye on the ball. Price action is all. Okay? So risk monitor turned green. Now, I took the opportunity to simplify what I was doing at the end of the week last week. I booked profits in all the names that I bought. I wanted to start over, think about it over the weekend. I bumped up my exposure to indexes a bit after booking profits in the individual part of my portfolio. And I really want to be intentional about how I structure my portfolio from here. If I'm going to buy individual stocks, I don't want them to be represented in the big indexes. Look, I could buy QLD and I can own the top 7 names in the NASDAQ 100 along with the rest of the NASDAQ 100 weighted average. Then if I'm doing it at twice the performance of the Qs, I'm probably capturing all the upside I need in that asset, in those assets. I mean, is NVIDIA going to go up twice as much as the NASDAQ 100? You see what I'm saying? Is Apple going to double the performance of the NASDAQ 100? Probably not. Now, do I run out there and end up investing in Meta, for instance? I might. Okay, I might. I think there's something going on in Meta that's very interesting. I have a 10-year-old son, and he comes to me this weekend and he says to me, Dad, can we get an Oculus? I mean, he hasn't known what an Oculus is. He's never even talked about an Oculus. I said, what do you mean you want to get an Oculus? Why do you want to get an Oculus? Well, he's got 5 friends in class. They all have an Oculus now, the new version that's just come out. And what they do is they put it on after school, okay? And they all meet each other in a room and they play tag. And it gets me thinking that if we actually have a Meta type revolution, and everybody's laughed at Mark Zuckerberg and what an idiot, and he changed the name of his company to Meta and all these type of things, the stock got crushed. But if there are 10-year-olds asking for Oculuses over Christmas and Hanukkah, okay, because there's killer apps that have come out that really make it, like the first couple of iterations of Oculus is kind of a waste, but it was interesting to see, but it wouldn't compel you to do something. If kids are coming home asking this for Christmas, then there's something going on at Meta, and it's something to consider, okay? So would I buy a big cap tech stock? If there's a moat around the business and it's a new product, something that's explosive, I might do that, okay? So what would be at the top of my big cap list? These are stocks to watch, right? That might be, and these are the big cap stocks to watch, okay? I think Google and Meta are probably the two big names that I would watch. Okay. And I might add them to the portfolio. I don't know about your child. I mean, I love trends. If you can identify trends from kids through the 20s and 30s, right? People in their 20s and 30s. Those are the trends that really drive growth. Okay, in some of these types of assets. I mean, I don't know about your friends and family, but I know a lot of kids spend most of their time watching YouTube, as an example. All kinds of YouTube stuff. All right, so I think what's going on at Google, I think what's going on at Microsoft, they could be unique things. Not Microsoft, sorry, Meta. They could be unique things, maybe that drive outperformance versus the NASDAQ 100. Okay, but with the exception of those type of names, if I'm going to fill out my portfolio with investments, then I want to focus on ARMR power play ideas. Okay, so here are some power play ideas. Grab a pen, piece of paper, write these down. These are stocks that I might be buying today that I might already own. Okay. Uber. Okay. Airbnb. These are niche companies that dominate their niche. And I think there's huge upside. Today, Airbnb was added to the S&P 500. The stock's going to be up 5-6% at the open. The lock and load bar was a few days ago. And I almost added this Friday. What a bummer. But I don't care. I'll pay $140 for it if it's breaking out and being added to the S&P 500. Okay, that'll take us right out above the lock and load day, this white bar there. Okay, and I'd want to own Airbnb, put it right next to Uber. Okay, I want to own shares of IoT. Now we day traded this on Friday. We owned it in front of earnings. Stock gapped up, booked a profit, sold off, bought twice as much. I doubled my positions. Things skyrocketed. I booked a profit at the end of the day. I want to own IoT. I think this is a huge story coming off of a great cup and handle base. I don't care about the cup and handle base until the breakout starts, right? Then it shows you what's happening. Price action is all. Okay. So theoretically, this was this green bar right here was the buy bar. That was in front of earnings. So right in here was the lock and load area. And what I wait for it to do is take out the highs of that lock and load area, which is right here. So those of you who went with me, we bought it in front of earnings, made money on the earnings announcement. Okay. Stock's up big. It hasn't even started yet. It takes out these highs. The stock is going to go berserk. You need the right market for that. But if that happens, I'm going to be all over it. Okay. Takes out the high of the green this day, I'll definitely be long if it takes out the high of this day, without a doubt. Okay. But sometimes these big up bars take about 4 days to consolidate. So we'll see if it stays below that high and consolidates, and we'll have this on our stocks to watch list until it takes out the high of the big up bar. Okay. I'd like to see maybe a consolidation that stays within above the 50% retracement line of this bar. Okay. So we got Airbnb, we got IoT. Pure Storage, without a doubt, is a fantastic story. The earnings announcement drove the stock down, but it closed higher. That was the lock and load day. We made some money day trading PSTG on Friday, and I'd like to own that stock again. All right. It can be owned anywhere in here. It's already above the lock and load day. Okay. I think ServiceNow, this is a bigger cap name, but I think I could own ServiceNow again. I booked a profit on it. I'd probably like to own it again. I think Palo Alto has to be bought. This is a sick chart pattern. Okay. Massive breakout, island reversal, gap back up, which is the lock and load bar. And if we close above these highs in here, I'm going to be long Palo Alto. Okay. And to round it out, probably MDB is another name on my list. Another type of island reversal. Gap down. Everybody's trapped down here who thought the story was dead. Gapped up. The last earnings announcement was pretty good. I didn't love the action on Friday. We booked a profit on that. We owned it in front of the earnings announcement. It gapped up. We booked a gain. It sold off and closed at the lows there. I don't love that pattern, so I have to see what develops. But those are at the top of my whiteboard. Okay. Now let's go over a couple stories in the portfolio that are getting attacked this morning. Gold and silver. Okay, this is real simple on gold and silver. Real simple. We bought them cheap. They ran up. We didn't chase. We raised our stop. If it hits our stop this morning, I don't act until 11:30. I let volatility occur in the first 2 hours around my stop. If we're below that stop at 11:30 and we make a new low on the day at any time, I'm gone booking a profit in those positions. If they recover by the end of the day and at the end of the day are above the stop, we carry them for another day. They've lived to fight on. Okay. So let me just reiterate. These red lines are our stops. Okay. So we'll see. But let me reiterate with you. Let me reiterate. I love weakness Monday morning, Tuesday morning. I love weakness at the start of the week. When I'm on bullish positions and they're down first thing in the morning to start the week, that's the best scenario in a bull market. Weakness early in the week, strength at the end of the week. Okay. I hate gap ups to start the week. Those are the worst. Those are usually finishing gaps. So don't fear weakness to start the week. I mean, there shouldn't be any fear in your investing process. If it goes below the stop, you go back to cash and you wait for the next setup. It's not a big deal. But I'm just saying weakness to start the week is opportunity to me. If the stops hold and the assets start to reverse, there's your entry points. Okay, so this is the last day of risk monitor green. Weakness in the morning is perfect. If it holds and we get risk on opportunities for the S&P, then I start filling out my portfolio with some of those names I shared with you at the top of my whiteboard. Let's shift over to uranium for a minute. CCJ is going to be down about 3% off of this unbelievable chart pattern. Courtesy of Erez, certified armor analyst. Erez, thanks for all the work you did on uranium over the weekend. I think this is probably the most important chart you could share with us. All right, I'm going to share it with all of you. Erez popped this into our Slack room over the weekend. Okay. This is what happened in 2003, which is right in here. Okay. 2003, when MacArthur River mine floods. Okay. The reason why we're talking about this morning is that CCJ came out and reduced their production targets. Cigar Lake and MacArthur River are going to produce less uranium for whatever reasons. Don't make a difference. Maintenance reasons and all that kind of stuff. The weakness in CCJ off of that's probably a buying opportunity because they're going to match all of their contracts. As Erez points out, and he's probably right, the price of U308 has been going up for the last X amount of weeks, probably because a big buyer's been in there, and that big buyer's probably CCJ because they knew what announcement they were going to make. And so they've been filling up the coffers so they could deliver. So the management team of CCJ is some of the best management I've ever seen across any industry. All right. They know exactly what they're doing. Okay. And take a good hard look at this picture here. When the second largest producer of uranium talks about less production of the asset, forget about what the stock does today. First of all, probably they're going to have blowout earnings because the price of U308 is going up. And of course, that filters into our other investments. So we own CCJ, right? But we own all of the smaller names through URNJ and URA. So while CCJ is down, I don't know, 2-3% this morning, I could see URNJ looks like it's going to open up 5%, right? And URA up 1.5%. And CCJ is in URA, right? So that's pretty impressive. So the point is, what just happened over the weekend with the announcement from CCJ is probably seriously bullish for uranium. All right. And, if you want to question that, just look at what happened the last time MacArthur River had a slowdown in production. The price of U308 went through the roof. All right. So wrapping up, I just wanted to share with you step-by-step process in how we trade the S&P. So real quick, we use SPXL to trade. And this is our intraday trading tool that we use with the ARMR Price Movement Profiler. Okay. Some of you guys are trading options off of this information. You can trade whatever you want. I like to trade triple the S&P. So I come in every day. I have at least a third of my capital cash. Okay. And then when I get our opportunities, put our day trades on. I use SPXL to do it. So 100% of the portfolio gets put to work, which is 300% exposure to the S&P. We use the price movement profiler to do it, which is what you're looking at here. The black dots are the VWAP. We use 3-minute charts. Standard deviations 1, 2, and 3 above and below the VWAP. Fibonacci extensions off of the opening range. And then the average true range indicator, highs and lows. Okay, these are all proprietary indicators. So off-the-shelf stuff we infuse with volatility components gives us the edge that we have. But what I want to share with you today is the execution strategy. This is the way we execute. It's a simple, clean way of executing. You know, we had another great week last week, but you can't rest on laurels. You can't say, this is great, so let's just keep doing it. You got to keep refining and getting better and better. You don't want to mess with what's working, but you can always find some ways to get more effective in how it is that you trade. So I like to constantly go over the weeks that I'm trading because the market's dynamic. And if you become static, you'll lose edge. So what I share with you right now is how I want to execute going forward based on going over all my trades over the last couple of weeks and months. And what do I see? We have this strategy where our buy trigger is really in two pieces. And I suggest you do this with your strategy, whatever your strategy is. You're going to have this moment where you think you should be buying the asset. I submit to you that's the lock and load bar, 3-minute bars. Great bar. It's the lock and load bar. It's not the bar to buy. Very often those bars immediately get reversed and they crater. You want to avoid that whipsaw. You want to avoid that chop. So the first pop that you think is the buy bar using a 3-minute chart, that's the lock and load bar. We don't do anything. If we take out the high, if the asset takes out the high of that bar by 3 cents at any moment during the next couple of bars or whenever, I put on half my position. If it goes up another 10 cents, I double my position. And at that moment, my stop goes in 15 cents below the price where I doubled, which will be 10-cent stop from my average price. The best trades never challenge that stop. So I'll get half my trade on immediately in the midst of a bar, intra-bar. It pops another 10 cents. I'm on the other half with a tight stop because the best trades will skyrocket and I want to be on those with the maximum size. It hits my target and I buy half, but can't extend another 10 cents, does this and comes down. I'm going to hold that half with a more lenient stop, smaller position size so I can give it a little bit more room. Sometimes it takes another 15 minutes before it takes out that high. Not every day is a rip. So in that case, if I have half the size, the low of the lock and load bar is my stop. And I leave it alone. Let it do its thing. If at any point it takes out that second target, 10 cents above where I bought it, I finish my position off and raise my stop to catch the rip. If it doesn't rip, I want out with a tight stop. That's how we're going to be executing today. Guys, I look forward to working with all of you. We'll start the live trading desk at 9:30. So we'll be chatting just like this, sharing screens, sharing information. Any questions that you have throughout the day, just drop it in the Slack room, and I'll answer as we go. I look forward to working with all of you, and I wish all of you a very successful trading day. Don't forget, you are the smart money. Start believing in yourself. Stop listening to everybody else and all the noise. Find a strategy that works for you. Execute that strategy. Be the smart money. Have a great day trading, everybody.